What's good, boys? Today we're going to talk about stop losses, take profit, and risk to reward. Okay, so first off, I'm going to just give a scenario. Okay, so everyone can understand, right? We'll just talk through it. Actually, I was going to type it, but let's say, right, you have two traders. Okay, one trader hit all of his trades are a 4 risk to reward. Okay, meaning he 4x's how much he risked. Okay, so that means this is what it would look like. For example, like this. He took trades that only looked like this. Okay, but if he risked 1,000, he would make 4,000. Okay, and let's say he took 4 trades. Okay, and lost 3 of them and only made one. Okay, let's think about it. If he makes one, he's gonna, and let's say he just risks 4,000. Let's say he's on $100,000 account and he's risking 1,000 per trade. Okay, if he's in his model is only 4 risk to reward, just like this. Okay, and he takes 4 trades, 3 of them lose and 1 of them win. Okay, he is still going to be a profitable day trader. Okay, 4 risk to reward means for the trade that he did win, he made 4,000. Okay, and then he lost the other 3, which means he lost 3,000, which means his net profit, his net P&L is positive 1,000. Even though he lost 3 and only won 1 trade, he's still a profitable day trader. Okay, so that's why risk to reward is so important in day trading, because you have to make your wins bigger than your losses, so that even if you do lose, 1 win will take it up and more. And even if you lose twice, 1 win will take up 2 losses. Okay, so that's what a 2-to-1 risk to reward would be. So this would be a 2-to-1 risk to reward. Okay, this means that, let's say you took 2 trades, right? One was a win, one was a loss. Okay, so technically you're 50% win rate, right? You should be at 0-0, right? But since you only take 2-to-1 risk to reward, that means the one that you won, you made 2,000, and the one that you lost 1,000, right? Which means your net P&L is positive 1,000. So once again, you are a profitable day trader. Okay, so that's why you don't want to be hitting only these like 1-to-1s, because, or even I've seen some people, they're hitting negative less than 1. Okay, you know what this means? This means that if you risk 1,000 per trade, okay, if your risk to reward is under 1, okay, that literally means that when you win and you lose, so your win rate is 50-50, so you should be at 0, right? That's like the minimum, right? If your risk to reward is less than 1, that means even though your win rate is 50%, you're literally still negative P&L. Okay, if your risk to reward is 0.5, that means you risked 1,000 and you only made 500. Okay? And then if you took a trade, you would have lost, and you lost the trade, you would have lost 1,000. So you would have lost 1,000 and then made 500. Your net P&L is negative 500. Okay, so risk to reward is very important. Okay, and we're gonna talk about what I do, how I get crazy risk rewards, and how I like to structure my risk rewards as well, and also how I like to structure my take profits and where I put my stop loss. Okay, so first we're just going to talk through stop losses. Okay, I usually put my stop loss at the reason on why I entered. Okay, so for example, if I were to enter off of a fair value gap, okay, okay, let's just hypothetically say, which actually this is an SMT, crazy. Okay, let's say I took this SMT trade. Okay, this high, right, was taken out here, and then you can see right here that same high was not taken out at all. Okay, so let's just go based off that. Okay, what happens? We start shitting, right? Let's say I'm taking the trade on NASDAQ, right? I scale down, so I had my 5-minute SMT, blah blah blah, and then I'm going to enter off of some confluence over here, right? Now, honestly, I can tell you right now, I would have entered off of a change in state of delivery here, right? We broke this low, came back up here, would have immediately entered, bang, right? Now, where would my stop be? My stop would be at the SMT high, okay? Because that was the reason why I took the trade. And then I probably would have targeted this imbalance, would have been take profit 1, Okay. Now we can go ahead and talk about stop losses since we're mocking up this trade, right? So remember, my stop loss is always at the reason that you entered, okay? Now, for example, let's say I wasn't really happy with that entry, okay? And or I didn't want to enter at this point, right? And I want to see more selling pressure, right? Let's say I wait a little bit, boom, we create this fair value gap, and then I'm like, okay, I want to see this fair value gap get respected. Okay, now this is a scenario where it wouldn't have worked out for you because you would have wanted to see us see selling pressure out, which you saw with this candle right here, right? Now, clearly, you can't put your stop loss. You can't put your I would not put my stop loss all the way right here because this is so overextended. That's crazy, right? Now, I don't know if I would have put it here because this is too tight. This is really, really tight. So I might have put it at the usually. So we know a fair value gap is a 3 candlestick pattern, right? To form that gap, it has to be 3 candles, right? So you can see right here we have candle 1, candle 2, and then this candle is candle 3, right? Now, that's our 3 candlestick pattern, right? Now, sometimes if the fair value gap is really, really big, and instead of me entering right here, I ended up entering like right here, I will put my stop loss at the fair value gap, right? Let's say I just entered all the way down here, okay? Then I'll put my stop loss at the fair value gap, okay? But if we entered right here when we saw this selling pressure out, right, this is too tight of a stop loss, right? So what you do is you put your stop loss at the beginning of the 3 candlestick pattern. We know that these 3 candles made the pattern, so this would be the stop loss, okay? Not this high or not this high. So this, because this is too overextended, this is too tight, this is just right. Pause. Too tight, no diddy. But it did end up working out. You know, you would have been in some drawdown for a minute, but like I said, I 100% would have taken this trade off the SMT or off the change in state of delivery, right? Which you can see we broke right here. Oh, I already marked it out. We broke right there, come back. Clearly, for the majority, my stop loss is at the SMT high. For nearly almost, because like I said, in my model personally, I only trade with SMTs, okay? So usually my stop loss is always at the high or low of the SMT, okay? Which in this case would be, remember, this was the SMT that high that got made, so it would be right there, right? But sometimes your entry isn't that good, right? Sometimes you would have entered right here, right? And clearly this is too overextended, right? So you need to be mindful of why you're entering, okay? Basically, your stop loss needs, what a stop loss means is that your trade idea is no longer valid, okay? It basically like pick somewhere on the chart where you're like, okay, if price reaches this point, my trade idea now is invalid, okay? When I thought was wrong, okay? Now, clearly, if we're taking a trade off of an SMT, right, that means that the SMT should continue going down, right? So if we come back and take out this SMT high, then, you know, trade's invalid, okay? For example, for a fair value gap, right, if we come up and invalidate this fair value gap, right, you can assume now that price is going to continue higher, right? So your stop loss needs to be at a point where your trade idea would be invalidated, okay? Let's say, for example, you trade with, let's say down here, I just randomly saw this. Let's say you trade with order blocks, okay? And you can see right here, what's the down move before the initial move up? Or I don't know if you guys do know what an order block is, but this would be our order block, okay? We come out, we tap back into this order block, and we see buying pressure out with this candlestick, right? That's our order block. Now, your stop loss, now let's say we come all the way down here and just invalidate this order block, okay? Now at this point, it's like, okay, this order block is invalid, okay? We got invalidated. So that means that is where my trade idea would have been done. And once again, that was also a really overextended stop loss. So, but I don't use order blocks anyway. So, but yeah, that's really the point I'm trying to get at here is it needs to be where your trade idea would be invalidated. Okay, so for example, when I was talking about this fair value gap, if we came up and invalidated this fair value gap, you can go ahead and assume price is going to continue higher, and then we're done with that trade. Okay, so that's really stop losses. Let's go ahead and reset this up. So remember, I would have taken this trade off with this change in state of delivery, stop loss at the SMT high, take profit 1. You guys know me. I like to target I like to target imbalances. So what imbalance would I target? Okay, I'm going to tell you take profit 100% would have been this 5-minute imbalance. And then, I mean, let's just say, I'll just overextend it. We'll just say I would have 15-minute fair value gap here. We'll just say that I really thought today was completely going down, and we can just set multiple take profits. So I can just explain. Okay, so this would have been a crazy trade. I actually had I traded this day actually, and my bias was bearish. Okay, but clearly we didn't start going down until 11:45, 12 p.m. session, and I don't trade PM session, so very unfortunate. 26 risk to reward. Holy shit. Either way, I was looking for shorts this day, and I never got it, and I ended up hitting during PM session, so I didn't take a trade this day. But point being, take profit for me. Take profit 1 has to be at least a 1-to-1 risk to reward, okay? And usually I am taking out 50% of my profits at take profit 1, okay? So let's say I have 4 contracts, or let's say I have 10 contracts in this trade. I'm taking off 5 contracts at take profit 1, and then so forth, right? And then I'll usually continue taking half. So this could be, I would take off 5, I would take off 2. Usually my last take profit, I would just leave 1 contract running. Does that make sense? So once we would hit take profit, like once we hit this take profit at this point, I only have 1 contract running. Does that make sense? So like once we would hit take profit 3, I only have 1 contract, or 1 lot if you guys are trading on the indices. Okay. Another thing to note is, personally, I do like to kind of trail my stop loss, but not really trail, but I'll explain. So usually when I hit take profit 1, right, no matter what, stop loss goes at break even, and I take away 50% of my position. Bang, right? Now, if we hit take profit 2, that's where I move my stop loss to take profit 1, okay? Because now at this point, it's like, okay, all my position was taken out at take profit 1. Which should have been above a 1-to-1, right? At least a 1-to-1 risk to reward, right? Which means that's good. That's good for the day, okay? But you can see here we hit take profit 2. My stop loss would have been moved down to take profit 1, right? Now, once we hit take profit 3, I now once again move my stop loss to take profit 2, right? And so forth, right? And obviously, if we would hit take profit 4, that's all the rest of my position, so there was no need to move it to take profit 3. But usually, I have 3 take profits, okay? If I could grab this. Okay, usually I have only 3 take profits, okay? So let's just say this was my trade, okay? Take profit 1 would have got hit. I would have moved my stop loss to break even, okay? Now, when take profit 2 gets hit, I move my stop loss to take profit 1, okay? And usually at this point, now I just let it run, okay? If we go to take profit 3, that's the rest of my position. If we go back to take profit 1, then I had partials at take profit 2, and I had all the rest of my position at take profit 1. So all my position was taken out in profit, which means that this would have been a big winning day, right? So, yeah, that's really it, boys. That's really it about take profit. So, like I said, I also I trade with imbalances. Okay, so one thing that I sometimes do, okay, I'll have a main draw for the day. Okay, like I'll have a main draw that I like want to see filled. Oh, and I guarantee you, I remember. I think there was a daily for value gap here that okay, no, it didn't get hit. Usually I'll have a main draw. Okay, this was it. Okay. Well, clearly this is also really okay. Let's just say this, or no, I target imbalances. Hold on. Oh wait, we can just do this 5-minute for value gap. Or this 15-minute for value gap. Sorry. Okay. So we have. Ooh. Is this a 30-minute BPR? No, it got filled. Um, okay, let's just say we have a BPR down here. Okay, just make some bullshit up with me, boys. Okay, or actually, we'll say there's a BPR right here. Okay, because this is a fine example, right? Let's say we have a BPR right here. Okay, my take profit obviously needs to be at the beginning of the BPR because we don't know how far in we're gonna fill. Okay. Now, one thing I like to do personally, okay, is obviously you guys know I like to target BPRs, right? So, what I personally do is I'll usually have a take profit that I like have the most confidence in it getting filled, okay? And usually what I also mean by that is hold on, let me write BPR so then hopefully okay. So remember, think of this as remember, just be like, okay, there's a BPR right here, okay, guys. So just pretend there's a BPR here. Now, like I said, I like to target imbalances, right? And BPRs are clearly the strongest imbalance confluence, okay? So usually what I like to do is I'll have an imbalance, right? Clearly we might reject off the imbalance, right? We might respect it, right? Price might come down here, right? I was right. We fill in the imbalance, right? And then we boom back up. Okay? And oops. And basically this would be where I take off actually most of my position. So even though I have take profit 1 right here, if I was really confident we would come up to this BPR, instead of taking 50%, let's say I had 10 lots, okay, or I had 10 contracts, okay, instead of taking 50 position off, which would be 5, I would only take off 3, okay? I would take off 3 here, and then I would take off 6 at the BPR, and then remember, I would just leave 1 contract or 1 lot at take profit 3. Does that make sense? Because one, I usually, like I said, I like to target imbalances, right? So usually I'll have an imbalance that I really want to see us get filled. It'll usually be a BPR. If it's not a BPR, then I usually don't do this. I mainly do this with BPRs, right? I'll do this with fair value gaps as well, but I mainly just have one take profit, and it's always an imbalance, right? I'll have one imbalance that I am very confident that price is going to reach, okay? And then I'm not confident that we might continue lower, right? We might respect that imbalance, okay? So, for example, in this scenario, right? If I was going into this trade and I entered here off that change in state of delivery, right? And and in my head, this BPR that's imaginally here, right? This BPR is my main draw. This is where I'm very confident price is going to go. Okay? So I would only take off 30% of my position here, okay? But then I would take off 60% here because I am very confident, right? Let's say clearly, okay, if this is a 2.5, this is a 9, okay? You're going to make a lot more money if you hold till the 9, okay? Let's say for example, I closed 50% here and then I closed 40% and then 10%. So if I closed 5 here, 4 here, and 1 here, okay? You would make significantly less if you were to close 3 here, close 6 here, and close 1 here. Okay. Why? Because you're closing most of your position at a better risk to reward. You're closing most of it at a 9.8 risk to reward instead of the 2.5 that was right here. Okay. So that's really how I do take profits. I always have at least 2 take profits. I never do 1 take profit. I wouldn't recommend doing 1 take profit either. But take profit 1 needs to be at least a 1-to-1 risk to reward. Okay. And so forth, right? And then obviously I have this little scenario here, but this doesn't honestly happen often. It's mainly when I'm targeting a BPR, which clearly that's an A+ setup for me. We've talked about that as well, or you will see me talk about that. But I will target draws on liquidity, but I like to prefer targeting imbalances, but I will target draws on liquidity. Completely fine if you guys do that as well. Previous session highs or lows is what I like to target. So London session highs or London session lows, or even Asia session high or Asia session lows. So So that's really it about take profits, and that's how I take out all my positions and everything. And then for stop losses, remember, um, it needs to be at where your trade idea would be invalid. Okay. So obviously, if you took it off of an SMT, right, your trade idea would be off the SMT high or low that you took it off of. If it's a fair value gap, then remember the 3 candlestick pattern. Okay. If it's a big fair value gap, you can go ahead and put your stop loss at the top of the fair value gap. But if it's a kind of smaller one, then remember the 3 candlestick pattern. Just be reasonable and rational. Okay. Don't have your stop loss too tight and don't have it too overextended. Okay. It's really as simple as that. But make sure you put it at where your trade idea would be invalidated. Don't put it at any random high. Okay. Don't do that. Okay. Be rational. Think about it. Where would my trade idea be invalid? And then put your stop loss there. Okay. And another thing to think about is if your trade is a shitty risk reward, you shouldn't take it. Okay, for example, this day, we had a 30-minute BPR. Yep. We had this 30-minute BPR right here. Market opened, and at 9:40, I almost took this trade off of a change in state of delivery. I literally remember it. Oh, we gotta remove everything. Oh, I removed the 30-minute BPR I just marked out. This right here. All right. So this day, remember I told you my bias was bearish, right? So I thought about this trade, but I chose not to take it because I didn't want to trade against my bias, right? But, for example, market opens, we're low-key chop work. This is a 30-minute BPR, right? Now, I thought we ended up making a bullish SMT off of like one of these like 5-minute lows. So let's just say we made this SMT. I don't know which low. I don't remember, but I promise you we made a bullish SMT on the 5-minute, okay? And then what did I see? I saw this change in state of delivery off this right here. And then entered. And I thought about entering here. Now, where would my stop loss have to be? At the SMT low, okay? Take profit 1 would have been the 30-minute BPR. Awful risk reward. Absolutely awful. Now, I could have put it right here, right? But then once again, like, why am I putting it here? This makes no sense. Does that make sense? So, and you could have even like played it off of this buying. So we have this 1-minute fair value gap right here, right? Let's say it got respected with this candle close, right? So we close right here, right? So you would have entered right there. Still not a good risk reward and it hit. Clearly it did, right? But just not a good risk reward. So I chose not to take this trade because it's not worth it. Okay, you're literally making less than you risked. That's awful. Your risk reward should never ever be under 1 for take profit 1. Okay. That's really it. I explained the importance of risk reward in the first scenario, right? Stop loss needs to be at where your trade idea would be invalid, right? So talked about that as well. And we also talked about multiple take profits, how I take partials, right? I usually do take partials off of a take profit 1, and then I'll do half and half and half and half until I have 1 remaining, right? So remember, if I am in a 10 contract trade, I'll continuously take off half until my last take profit, and then I'll have 1 contract running, okay? And if I'll have 2 take profits, I'll just take off 50-50, okay? 50%. But that's really it. That's everything about take profits, stop losses, and risk to reward, and how risk to reward is important and everything. So kind of a longer-ish video, but that's kind of like a small part that not many people talk about, but it is very important because some people mess up their take profit. Like, it's just because you're in profit doesn't mean it's a good trade, okay? And just because you lost a trade doesn't mean it's a bad trade either, okay? Just make sure you're following your plan and everything. And yeah, that's really everything you need to know about stop losses, take profits, and risk reward. Yeah, And make sure you always set multiple take profits, at least two. Two is fine, but I personally like to do three. Mind you, though, I'm not gonna a scenario. Something I should have explained right here. Actually, remember when I told you I wanted to take these longs, right? What I thought. Remember we had this 30-minute BPR. What I thought, right, was, remember my bias is bearish, right? Which clearly it was later on, but what I thought was going to happen was I thought we were going to fill in this BPR and then we were going to go down like I thought, right? Clearly we took out London High and then we went down, right? All good, right? But one thing you shouldn't do is, just because you're like, oh yeah, this is a bad risk reward, I can't take this trade, doesn't mean you just do that. Okay? At this point, you're just targeting random bullshit just so you can take a trade, right? I wanted this BPR, right? That was my main take profit one. Just because, so some people, instead of having that as their take profit one, they'll just have this high at their take profit one, right? That's stupid, right? That's you just overextending your take profits so you can just take a trade, right? You shouldn't do that, right? Don't make up take profits afterwards just so your risk reward is not awful so you can take the trade. Okay? Be strict on yourself. I wanted this 30-minute BPR, right? That was my main draw. My take profit, and that would have been take profit one, and I will not move take profit one from that, right? Take profit one was under a 1-to-1, so it's not worth it, and I'm not going to take it. Simple as that. All right. So don't just like extend your take profits just because you want to take the trade. Okay, don't do that, and it's not worth it. Okay, because then you probably won't hit the trade because you're literally just targeting bullshit that you don't even know it's gonna hit. You're just targeting it so your risk reward is better, so you can take the trade. Okay, don't ever do that bullshit, boys. But yeah, that's really it. That's everything. Hope all that made sense. And if y'all have any questions, just text me. I got y'all. And yeah, peace.